Yes, thanks very much, Devon. Indeed, all markets will be looking to see what the European Central Bank does in terms of its monetary policy. There is some expectation that we may see some more easing, but the question that's on many people's lips is how much further easing can the ECB actually do? They already have interest rates in the negative and quite a lot of cash flushing around purchasing government and corporate bonds. So obviously we'll have to wait and see what comes out of that. I think it usually comes out, the announcement, at around 3 o'clock our time. Markets looking to that. A positive trade data that came out of China boosted commodities somewhat. This as imports grew there for the first time in quite some time, and the imports constituted things like iron ore, coal, and other commodities. So that's positive. Whether that trend will continue, we'll get our analysts to talk to that. And the rand seemingly maintaining its own, holding its own. It's now trading well below the 14 rand against the dollar mark. Let's take a look at the indicators. Well, I'm joined by Brigid Taylor. She's from K-On Capital. Thank you very much for joining us. Sure. Good stuff. European Central Bank coming out with its monetary policy statement. What's the expectation?
Well, we're expecting to see interest rates remaining at low levels. How much quantitative easing there will imply going forward. So you mentioned earlier with regards to the buyback of the bonds, that's the corporate debt as well as sovereign debt. It's probably likely to persist. I think that nothing really changes out of the European Central Bank for now. They're on cautious watch post the Brexit. So keeping that economy stable is number one. And then it'll be interesting to see if Mr. Draghi talks about the banking sector in Italy, because that is a big concern. But other than that, I think it's, most of the news at the moment when we talk about central banks is around the Federal Reserve in the US.
Up until recently, a lot of the data that came out of the UK seemed to suggest that there wasn't really any Brexit impact, but we saw that their production figures on the manufacturing side fell a lot more than expected, and people now implying that perhaps this is the beginning of an impact of Brexit coming through. Your thoughts?
I think that if we look at the Brexit scenario between the UK and the Eurozone, I think the UK is going to be better positioned. One, they're a single economy. They can manage their own monetary policy now. They can make their financial centre more attractive. The biggest issue that has always remained within the Eurozone is the fact that they are looking at so many moving parts with regards to much weaker economies, stronger economies, and all of that political dynamic that really doesn't speak well to growing that economy. So for now, I think the UK has produced great results. People still singing their praises, considering the fact that a lot had already priced in the UK actually coming on the back foot with regards to how they would perform or outperform the Eurozone. So I think for me, my money would be on the UK.
Okay. Now, there is a feeling that the US Fed is unlikely to raise rates this month, although the expectation is that they will down the line. Yeah. And then on top of that, we have the ECB that's going to announce its monetary policy. The question is for South Africans here at home, so what? How do these two factors feed into the rand and into the South African economy?
Well, it's the big thing, and that's the key driver of markets at the moment is what we call the interest rate spread. So if you're looking at funding, so you borrow money in the US at almost 1%, maybe lower, and you're able to invest it in a place like South Africa, where if you look at our bond curve, you can get up to 8.5% if you're in the 10-year space. That's good yield carry. So that means that you're effectively walking away with 7.5%. It's good money, especially when the rand itself is weakening. So if we look at the recent move, rand was sitting at around 14 rand 50. So for every dollar that a US investor brings to South Africa, they're getting 14 rand 50. That means they can buy many more bonds for the same amount of US dollars, and they're getting that return. Then as the rand gets stronger, it means that they pay less rands to buy the same dollars back. So both of those speak to a good investment, and that's why we see this yield move and this yield trade on book, specifically in countries like South South Africa. We've got good interest rate curves. We've got a lot of liquidity in the markets, and the markets understand South Africa. So you talked about it earlier, at sub 14, we almost at 13.85. So that's a good move in a day, 15 cents stronger on the back of a slightly weaker dollar, as well as we had our GDP out, we had good manufacturing. So I think from South Africa's perspective, the market's very, very happy that we missed the technical recession and we are starting to show some form of growth.
Do you expect that we're going to continue to see this momentum, and that what happened last week with the political fallout and all of that was just a mere blip, and therefore in terms of the inflation picture things could look better?
You know what, I've got to say that we've got to keep in mind that the political issues, and we saw it play out before when we were talking on the show before, is it does impact the rand very negatively. So there's a couple of things that we're going to keep an eye on. We'll watch out what's with regards to what happens around Mr. Gordhan and Mr. Zuma. And then the other thing to keep an eye on is the medium-term budget statement, which will be coming out towards the beginning of October. And that's an important key statement around how has the economy performed since the beginning of the year up to this point, based on all the changes that Mr. Gordhan promised industry and promised ratings agency. So those are two key things that we're going to be watching. But in terms of how the rand's performed and how the currency is performing, a lot of it will also have to do with the fact that we are traded on a global scenario. So because of the dollar weakness and because of our interest rates remaining low across the board, South Africa does offer value right now. But as I said before, watch out with the politics. It unfortunately does cost us.
We're running out of time, but let's have a quick look at First Rand. First Rand reported its annual earnings. The diluted normalized earnings per share up 8%, but the basic headlines per share were up 5%. We won't go into the dynamics of that. I mean, when you look at this particular stock, how does it fare relative to its peers?
I think they've done remarkably well. I mean, the environment's been very, very tough. If we look at the global environment as well as the local environment, not a lot of growth. Their biggest growth engines come out of the FNB commercial banking side. A good growth scenario. What that means is that they're getting more loans on book. They're able to grow that corporate banking. But also interesting to note that even the investment banking arm, being RMB, has done significantly well, and they're coming off quite a high base. So putting all of those together, for me, it's a good scenario. They are aware of the fact that they've got to concern themselves around the non-performing loan book. But I think that that's something that we're going to see biting banks locally, and it is a concern. It's not just First Rand. This will be across all the banks, the big banks, particularly in South Africa. I think it was a good result.
Okay, we're going to leave it there. Unfortunately, we've run out of time. Thank you so much, as always. That was Brigid Taylor. She's from K-On Capital. After the break, Devon has more business news for you.